Hello and welcome. You're watching Money 9. I'm Sakshi Patra. Well, the stock markets have claimed new record levels, and in the world of mutual funds, companies are launching new schemes via NFOs or the new fund offers, especially in the category of Flexi Cap Funds to tap all the investor interest and the euphoria in the markets right now. Nippon India Mutual Fund too has recently launched its India Flexi Cap Fund, which is an open-ended dynamic equity scheme for investors, and it is open until the 9th of August as well. Now, to find out whether these flexi cap funds have the ability to generate alpha for investors over the markets or the index returns, and is it a great place for you to really invest in? We'll discuss all of this with a very special guest who's joining in. I'm joined by Mr. Manish Gunwani, CIO, Equity Investment, Nippon India Mutual Fund, on this edition of Money Masterclass with me. Mr. Gunwani, it's great to have you with us on Money 9. Thank you very much for taking out time for us. Let me just kickstart by asking you that flexi cap funds lately have been seeing a whole lot of interest from these retail investors, because it's a new category and there's a lot of interest also. Could you list out, what is the kind of response that you've been seeing in this space, and why are investors really keen on, investing in this particular category?
Hi. We're definitely seeing a very, very strong response from investors on FlexiCap funds. The reason is that obviously by definition, these are funds that can straddle large cap, mid cap, small cap to any extent. So they can swing between these three categories wherever they think that alpha can be created. Also, I think it helps that a related point is that the investment universe is very vast. So unlike, let's say, a large cap fund or mid cap fund, which can't buy too much into different categories, a flexi cap fund can buy literally any stock in the universe. And third important point is, if you think about how these three segments have performed last 1, 2, 3, 5 years, there have been phases where, like 2018 and 19, when large cap did very well, very narrow market. But today, when you sit at this point on a 3-5 year basis, broadly, mid cap and large cap have done pretty much the same. So now it probably is a more bottom up, or basically you need flexibility to move around the market. Yeah. You can't say this segment is looking much better than this segment. Maybe 1 year back, you could have said small cap is looking better than large cap. So today, there is a neutralish view on large cap versus mid and small caps. And that makes investors want to go into a fund where you leave it to the fund manager to decide that a stock is good, whether it's large cap, mid cap, doesn't matter. And that by definition is the flexi cap fund. So I think the fact that going forward, you don't see any strong call between large cap, mid cap, and small cap is also part of the reason why a lot of investors want to move into flexi cap funds.
Exactly. And, this is the point that I wanted to ask you next, that, you rightly pointed out how the flexi cap funds offer the flexibility for fund managers to pick and choose stocks. And that is across market capitalization. So that flexibility is a very big positive. In the current market environment, we have been seeing that the mid caps and the small caps have had a very huge run in this year itself. 35% uptick for the mid caps, about 60% uptick for the small caps as well. They have outperformed the large caps at this moment. And you rightly pointed out that there is a neutralish view. But in the current environment, when we've already seen the Nifty clocking in record high levels of 16,000, why do you think this category particularly would be relevant in the current scenario for investors to pick?
So when markets have gone up and on a price to earning multiple basis, obviously, if you compare with historical levels, it is high. But I just want to add two counterpoints to this. Sure. One is that if you see the earnings cycle of India from 2011-12 onwards, you had a big down cycle where the listed companies' profits were growing less than nominal GDP. Usually, they should track or grow above nominal GDP. Yeah. And that cycle kept on going for 7-8 years. In 2021 financial year is probably where the turnaround has come, where GDP hardly grew and listed companies' profits grew a bit. Next 2-3 years, there is a kind of catch up of that because why this down cycle happened is because of growth, because of bottom up issues. A lot of them are reversing now next 2 3 years, hopefully. So you will have a fairly strong earnings growth cycle over next 2 3 years.
Yeah.
Second is on a broader economic growth, global growth, domestic growth. All the ingredients are there for whatever slowdown we've seen over last 3 5 years due to various reasons. Um, that the macro is conducive for a big bounce back in the economy itself.
Sure.
Now, and thirdly, I think there's also the question of interest rates, right? I mean, your fixed income, etc., is yielding lower and lower returns, which is why people are getting interested in equities.
Yeah.
So, which is why at this point, in fact, we talked about how large and mid are looking similar in terms of risk reward. Similarly, I think the market also is at a point where it's not a very cheap market, but it's also equities as an asset class is something you can't do without, right?
Yeah.
Because fixed income is not yielding anything.
Mm.
Real estate prices after COVID can't go up too much, to my mind.
Yeah.
Gold is gold, so you need some growth asset class in your portfolio,
Sure.
um, which is why I think equities is still a great risk reward option. And then within that, because of this internal dynamics, investors are saying um neither is valuation of large cap or mid cap or small cap very different. The price to earning multiples based on historic standard, they are roughly the same in terms of deviation from the historical levels. So there's nothing much to take a asset class view. So
Sure.
best to give it to a fund which can move around and be dynamic in these segments.
Right, absolutely. I also wanted to ask you if you could now highlight for our viewers, for the investors looking to invest in this particular fund, the what kind of investment strategy that you have in the Nippon India Flexi Cap Fund, the strategy that you're working on to navigate and to benefit from the emerging trends in equities that we are seeing currently.
Right. So let me split that between the large caps and the mid caps. So in the large caps, we will have two buckets. One
Mm.
is top 5 7 will be mega caps from a risk management perspective, mimicking a bit of the index.
Okay.
The second half of the large caps will be the active bets within the large caps, where we will take a few concentrated bets in the large cap space. In the mid and small cap space, we feel that there are two or three mega themes which um, both from a return risk reward perspective look interesting, and also I think will add a lot of vibrancy to that space over next 1 or 2 years. So one is of course this whole tech thing. Like we're living in an age of disruption. You're seeing new age business models, whether it's e-commerce, gaming, aggregators. So this whole digital kind of play. The second is the manufacturing shift from China to India,
Yeah.
where more and more segments now are joining the party in a sense because of PLI, because of geopolitics, because even US, Europe are incrementally putting more and more restrictions on Chinese
Yeah.
imports. So because of these two mega themes, plus the fact that, as I said, from a top-down perspective, you feel that the economic recovery should be strong. So
Mhm.
there will obviously be the cyclical sectors like real estate, industrials,
Yeah.
which can benefit. These are three broad themes that we feel even now some of the mid caps falling within these themes, there is good risk reward.
Okay. Okay, understood that as well. Now, you shared with us that how these segments will be divided between large caps and mid caps and sectors and themes also. On what parameters will you be selecting the stocks now for this portfolio? And the particular themes, like you just said, that cyclicality will be important to track. Realty, like we've been seeing a lot of action there. That could be an important part. If you could just detail on the parameters of the stock selection.
So any stock which we look at broadly is a play on three factors, which is basically valuation, business model, and management. So typically, I think there might be a bit of a difference in which we choose large caps and the way we choose mid and small caps. Large caps, we feel that at this point, the value orientation or value style might be beneficial because typically when economies recover, what tends to happen is in every sector,
Hmm.
um, there is a leader whose price to earning or price to book is at a big premium to the sector.
Sure.
But in a phase where the economy is recovering, the earnings growth between the leader and let's say the next 3 to 4 players may not be
Hmm.
that much, right?
Hmm.
And then the valuations also converges.
Correct.
Um, so broadly, I think a value orientation in large caps is interesting at this point. On
Right.
the other hand, in mid and small caps, I think the growth orientation is better because essentially what are we trying to do in mid and small caps is to play the big changes that are happening in the economy, the new business models, that this whole surge in manufacturing driven by shift from China. So
Right.
there, our priority there is more the management and the business model and not so much the valuation, because what tends to happen is when you have a smaller base and a big theme or a big trend which is behind you,
Mm-hmm.
then if the managements are able to execute, then the growth will be fast enough for valuations to not be that much of a criterion, because on the smaller base companies can definitely grow. A small example we saw in IT at some point, mid cap IT was at a big discount to large cap IT. But today, if you see mid cap IT is actually in line or maybe sometimes more expensive than large cap IT, because some of the mid cap companies have demonstrated that from a smaller base, they are able to grow um, higher and longer compared to some of the large caps. So I
Understood.
think, I would kind of differentiate that way that, of course, when I say growth in mid cap, is not like we will not have a single value style in mid cap, but just that on an aggregate basis, value in large cap and growth in mid cap is what we're looking at.
Understood that, and point well taken. Now, I wanted you to help all our viewers really decide and as to why should they really pick Nippon India Flexi Cap Fund as their next investment. Help them understand how different is it going to be from the other funds that are already there in this category, and the sectors you're overweight, underweight on, and why should they be really focused on this fund?
Yeah, so let me talk about how we are different from most of the funds in the category. One is that we have a higher focus on mid and small caps, right? I mean, so if you see both our small cap fund and mid cap fund, they are among the biggest funds in the industry. Both of them have done well from a 3 to 5 year basis. So the point I'm trying to make is, as a legacy, we have higher focus on researching mid and small cap than many other houses, and that is there is evidence to show that, right? And even in this fund, what we are seeing in most of the category funds, large cap is more than 70-75%.
Mm-hmm.
We intend to be slight across the cycle. See, there might be one point in 5 years where we may be very high in large cap because mid caps are very expensive. But if I take it on 3 or 5 year view, we will tend to have more mid and small caps than most of the funds in the category. The
Okay.
second point is how much active weights or how much are we different from the benchmark. For example, there's a parameter called active share. So what we're saying is in active share, which measures how much are you different from the benchmark. Again, we think will be higher than most of the funds in the category, because um, partially it's a consequence of having higher mid and small caps. But basically, we think that the flexi cap category is about aggressive stock picking, which we will play through, deviating more from the benchmark. So
Mm-hmm.
these are some ways where our fund, we think, will be different from most of the funds in the category.
I'm sure this is going to help all our viewers really decide as to should they go for this fund, or I'm sure they will. Let's move on to understanding, sir. I wanted to take your view. on the markets overall. We have seen a very sharp run up over the last 1.5 years from the time that we had seen the market crash in 2020. Despite the kind of COVID pandemic that we have seen, the disruption in the economy overall, the markets have been fairly resilient, and all pockets of it have actually enjoyed the benefits of the kind of rise that we've seen in the benchmarks as well. Do you see the markets continuing despite the kind of concerns that some experts are talking about on the valuations front, the market cap to GDP? And also, when we talk about the higher retail participation, the increased primary, markets activity, and all of this is actually being seen as some kind of red flag by some of the investor community as well. Your take, so that investors can really understand, if this is the best time for them to invest in this fund.
So I think it's important to be level-headed. So clearly, if market last 1 month, 3 months has gone up too much, I think there might be short-term correction. And I generally feel that over next 1 to 2 years, we will have two steps forward, one step back kind of configuration. The reason being that, from a recessionary kind of condition, which we were in April 2020, uh, and this is very normal, is that the first part of the gain, which is actually the bigger gain in
Hmm.
markets, comes when both earnings are being revised upwards
Yeah.
from a very bearish scenario, right? So April 2020, everything looked like ending times. So from that bearish scenario, slowly earning estimates start increasing, and the P also increases because people get confidence that the world is not ending, right?
Hmm.
But that phase globally is gone, right? I mean, you have US, every market, Europe, everything is now at all-time high. So
Yeah.
now it's a game between earnings doing pretty well because still large parts of the globe are under shutdown restrictions. They're coming out, so global growth expected to be strong next 1 year. So I think you will see continued corporate earnings trend not only in India but across the globe, and we are
True.
seeing S&P earnings also doing very well
Hmm.
now. But here the thing is, from now obviously you can't expect price to earning multiple expansion. You have to, if you're conservative, you have to say that since economies are recovering, generally liquidity will be normalized by central banks. Interest rates may go up, credit spread may go up. In which case, cost of equity goes up, and therefore price to earning multiple should come down.
Okay.
So your return has to be, let's say, if I were to take India's example, your return in 3 years, you have to say if earning growth is X, there is certain Y you subtract from that because of compression in price to earning multiple.
Hmm.
But the good part is that X, the earning growth, next 2, 3 years looks to be 18-20% from bottom of estimates of various people. And therefore, even if price to earning corrects a bit, we should be okay, I think. But as I said, you will have, I think, phases where optimism on earning growth will pull the market up, but then
Yeah.
you will have some Fed, some RBI making noises about liquidity being withdrawn, and then we'll get some
Yes.
corrections. So you will have, to my mind, as I said, two steps forward, one step back kind of thing. And
But still,
maybe
a good
right
idea
now, in the
to
two step forward type phase, yes.
Absolutely. Well, on that note, I'd like to thank you very much, Mr. Gunwani, for sharing these wonderful insights with all our viewers. It has been a pleasure speaking to you, and I hope to get you back on many more interactive, opportunities that we get to speak with you on no more offers as well. And all the best for this one as well. Many thanks for tuning in. Thank you so much. And with that, we wrap up this edition of Money Masterclass, and hope you really benefited from the kind of conversations we had on this new NFO. And you got to learn something. We'll keep getting you such interesting conversations around the world of mutual funds and how should you be managing your money as well. Thank you very much for tuning in. There's lots more coming up right up next.